right, we need the pound to do what it do. My favorite pair. We just need to hold on for 17 seconds to get the double up, push up pound, push up pound, push up pound, push up. There we go. There we go. And then we just want to break out here and keep going. 4, 3, 2, 1. Say it with me.
Easy money.
All right, we caught a beautiful run on this pound. I actually went here when this candle broke higher. 1, 2, 3. Then I went here and it gapped down, so I doubled up on that one, which you just saw. That was a good finish. And then again, we got the low, higher low, broke above everything here, and we took that one. Pound is doing what it do. Pound is doing what it do. Good run, pound. Good run, pound. That's a good run. That's a quick 4 of them. I'll take it any day. Take that any day. Man, that was 4 of them in like 10 minutes, maybe 15 minutes. 10, I think 10 minutes. Let's count it down. 3, 2, 1. Say it with me.
Easy money.
Hey guys, how's it going? JD here. I'm really excited to drop this video today because I think I'm going to cause you to look at the market very differently. So in this video, we're going to talk about how you can give yourself money out of trading the markets daily. Okay, so man, I'm excited. This is going to be juicy. This is going to be juicy. Listen, I want you to look at the market in a different way today. I want you to imagine that the market is like a sea of money. All right, it's just an ocean of money. Imagine that the marketplace, it doesn't matter which market, futures, Forex, stocks, just imagine that it's like an ocean filled with money, and it's also open to anyone. All right, it doesn't matter your color, it doesn't matter your creed, it doesn't matter. It's open. It doesn't matter if your history, it doesn't matter your record, doesn't matter if you're a felon, it doesn't matter if you didn't graduate high school, it doesn't matter if you don't have a college degree. It's just open for anybody. It's open for everybody to come out and give yourself money. Right? Isn't that a great place? A place where anybody can just come and take care of their responsibilities. A place where anybody can just come, scoop up the amount of money that you need and take it back to your family, take it back to your village, take it back to your community. Doesn't that sound like a wonderful place? Well, I'm here to tell you to share the good news today. That place does exist. It exists in the trading markets. In the trading markets, you can go and learn how to give yourself money. All right. So how do you do it? Glad you asked. All right. To get the ability to give yourself money out of the markets, you're going to have 2 skill sets. It's 2 things. They work hand in hand. You got to have them both. Can't have one and the other. You have to have them both. All right. These 2 things are, number 1, you have to be able to perceive opportunity. Okay. Let me put it this way. You have to be able to see opportunity in the marketplace. All right. And once you can see opportunity in the marketplace, that moves you into the second factor that you're going to need. You have to have the ability to execute a trade. That's it. If you can see the opportunity and you can execute a trade, you can give yourself money. All right. I want you guys to look at the market like this, because typically we look at the market like, oh, the market is giving us money, right? Or we're going to the market to just extract some profits, right? Or, we hoping that the broker isn't cheating us and stuff like that. But typically we just don't think about giving ourselves the money. It's when you learn how to perceive opportunity and execute a trade, you give yourself money. All right. So as our case study, we're just going to use the intro from today. All right. And if you're brand new to trading, you're brand new to this channel, and you don't know how to see opportunity yet, make sure you stay to the end, because I'm going to show you how to do it. And hit that like button right now for your boy. All right, let's go. So in the intro, the pound dollar was trending. It actually was in a pretty strong trend. And because of me understanding how markets move, right? Me understanding the market cycle, because of me understanding that the market tends to move in twos, because of me understanding that a strong trend, any touch back to my 21 EMA, that's the only indicator I use. Any touch and another candle up, usually we're going to keep on trucking. All right. Because I have that knowledge of the markets, then I can look at that chart and I can see that opportunity. Hey, we're in an uptrend. Let's go long. Okay. I can see the opportunity because I have that knowledge of how markets move, and markets have a flow, just like the ocean. You know how the ocean, the current goes out, comes back, goes out, comes back. The markets move just like an ocean. All right. You get a trend up, trend break, retest a new high, trend down, trend break, retest the new low. It's a flow. Okay. This is why I'm going with this ocean scenario. The markets move just like an ocean. It's a flow. And when you can start to be in the flow, you know, be on your boat, ready to pay yourself, ready to give yourself money, and you can see the opportunity, then you can give yourself money. Okay. But it's more than that, right? Because in our example, okay, the pound was trending up. I saw the opportunity, but that's not enough, right? That is not enough. You have to be able to execute a trade when you see the opportunity. If you don't do them both, it's not going to work out. And that's the key. You have to execute. So what I teach on this channel is, you know, after you see the opportunity, then because the market moves in a certain flow, a certain pattern, there's certain patterns that's going to pop up. You're going to see higher lows. In this case, you're going to see higher lows. In this case, you're going to see higher lows. You're going to see second entries. You're going to see rally-based rallies. These are just things, or not things. These are trade setups that happen in a nice trend. Okay. Or just any touch off the 21 EMA. That's the trade that you have to execute. So you have to get good at seeing the opportunity, and then you have to get good at pulling the trigger to take the trade. And if you do, you will be giving yourself money. So look at it differently. You know, the market ain't giving you nothing because you can see opportunity, because you're not scared to pull the trigger. You can see opportunity. All right. So you have to see the opportunity. You got to pull the trigger. But let's talk about what will keep somebody from doing that. Right. So in the example, you guys saw that when we first started out, I was in a double up, right? But I had already won. Then I was in the double up. Okay. Because I saw more opportunity. So on the trade before the double up, I had entered, and then prices gapped down. Okay. So when that gap happened, let me talk about gap trading real quick. There's this thing in trading that when prices gap, typically they're going to fill that gap. A lot of people, there's something called gap trading that people do at the open of every market every day, or especially when the market opens up on the week in the Forex. If prices gap down like this, you just go long. You're expecting it to come up like this. If it gap down, no, wait a minute. If it gap down, you go long. If it got up, you come down, right? Because prices generally are going to fill the gaps. Okay. So gap trading is just a whole thing in itself. It's a whole strategy in itself. Well, when I saw that one candle gap down, that told me that, oh, we're probably going to fill that gap. Hey, this could be a double up opportunity. So I took that opportunity, I took that opportunity to double up. And I don't double up a lot, but if I do, I like to double up when I'm down. So then I can either get a wash or the double up win. In this case, it worked out perfect. Wow. Excellent T. And I got that double up win. Okay. But I saw the opportunity. Even though I was already in another trade, I saw the opportunity and I executed the trade. Here's the thing. Some people can't do that. Okay. Some people would not have been able to double up right there while you're already down. And that's due to fear. Okay. And I'm not telling you guys to double up. This doubling up isn't the point. My point is that if you have had a problem executing a trade, right? If you have a problem executing trades, so then you probably have some fear in place, right? Like if you can see the opportunity, like if you're great at chart analysis, you're great at reading the price chart, and you find yourself saying over and over again, I knew it was going to do that. I should have took the trade. You know what I'm saying? I saw that 3 candles back. I should have took the trade. If you find yourself steady, consistently saying I should have took the trade, then there's some fear somewhere that you need to work out. Maybe you're risking too much. Maybe you just need more practice. You're not confident in the setup. Okay. But whatever the case may be, you have to eradicate fear. All right. You can't have fear in this trading game. And so if you find yourself consistently saying I should have, fear is in place, you got to get rid of it, because fear is going to keep you from executing. So even if you can see the opportunity, perceive opportunity, if you can't pull the trigger, if you can't execute a trade, you're not going to be able to give yourself money. So you have to take care of fear. All right. And fear, okay, fear, listen to this one. Got one for you. Fear are nails that allow you to build a house of failure. Y'all like that? Fear are nails that allow you to build a house of failure. Okay. You have to eradicate fear. All right. Because if you don't, you would never be able to take that double up opportunity that was there. And it was there because of that gap. It was there. Okay. And then once it broke high and won, I had all the confidence in the world at that point to go again. Right. So in that run, you know, I was able to give myself $400. All right. I was able to gift myself $400. I was able to give myself $400 in profit because I was able to see opportunity and execute a trade. All right. And when you learn price action trading, when you learn how to combine, especially if you learn how to combine Fibonacci with price action trading, and you'll be able to see these opportunities, you will be able to execute a trade and give yourself money. All right. So that's it for me today. Sorry if you hear Titan up there yelling. Those two things. So just as a recap, if you want to be able to give yourself money, you need to be able to see opportunity, and you need to be able to execute a trade. All right. So we're going to do a work study lesson. All right. Where we can go even deeper into this, because like I said, I want to be able to help you guys. If you're brand spanking new to trading, brand spanking new to this channel, I'm going to give you one strategy that allows you to see opportunity and gives you the confidence to execute a trade. All right. So let's go over to the charts.
Looking for profitable trade ideas in the Forex market? Want to learn a unique strategy based on price action and Fibonacci retracement zones? Join our trading community now for just $10 a month and receive trade ideas and binary options chart markups straight to your inbox.
Okay, so we're going to actually look at the Amazon OTC. Today is Sunday, so OTC is all we have to look at. But I posted this in the Swing Trading Titans community earlier today, and this is just one strategy where you can perceive opportunity or see an opportunity, and it's just a Fibonacci retracement. It's a simple Fibonacci retracement where you just look for a nice long leg, right? Because we understand the market cycle and the rule of two, which is basically the market cycle is that you're going to get a trend down, a trend break, and then a retest to a new high or low, and that the market typically moves in twos. So we use that information to see opportunity. And in this case, what we were looking for is, I was saying, hey, we're waiting to go short because we see this huge run down. We know there's probably going to be at least 2 legs of correction, and then the market will start to trend down again. That's just one way that you can perceive opportunity. Okay, so let's go to it now at a closer view. All right, so we're back, and again, this was Amazon today. So here was that huge leg down. Okay, I drew from the top here to the bottom here. Then this gave me the sweet spot zone right here. So at that point, all we're doing, we're waiting. Right, it's the waiting game. And just again, so what we look for is the market cycle. Typically in the market cycle, you're going to get a trend down, trend break, retest a new low. The market cycle runs in both ways though. So what you're looking for is that same situation going up first, because we're looking to go short. So what we want to see is a trend up, trend break right here, retest a new high. So this miniature retracement market cycle is over. So now that we know that that market cycle is over, now it's just about, we see the opportunity, right? So the opportunity is here. We got a trend down. Let me change colors. We have a trend down. Okay. We got a trend break. So the opportunity that we see is the second leg of the market cycle. That's the opportunity. So we see that opportunity coming. Okay. Here's the other part to that. From doing this over and over and over again, understanding the market cycle, understanding how the market moves, understanding that this area right here is going to be an area of entry. It's a entry zone area on any price chart. It doesn't matter whether you're trading Forex, futures, stocks. Okay. If you use this one Fibonacci strategy, you will see that it shows up in every market, because markets just move like this. You know how oceans, like in the beginning, I talked about the market being like an ocean, right? The ocean has waves, right? The ocean comes in, goes out, comes in, goes out, right? Don't oceans have like a kind of a flow, right? Oceans have a particular flow. All right. What I'm trying to show, and what I try to teach all the time, is that markets have a particular flow, right? And, you know, I call it the market cycle, but it's a flow. And typically it flows where it's going to trend down, trend break, retest, or it may go, you know, the opposite direction. It's trending up, trend break, retest. It's the same market cycle, but you just have to understand how the market is flowing. But here's the deal. When you do this, when you mark this up over and over and over again, and you see prices stop right here over and over and over again, that gives you confidence to execute, right? So, you know, fear keeps you from executing, but experience, you know, getting your chart hours up, you know, drawing fibs over and over and over and over again, noticing that, boy, when prices get to the 618 level, which we call the golden ratio, it's amazing how prices will start to push down from that zone. Why? I have my reasons. Well, I might as well just tell you. One of the main reasons why is because I believe, from my research, that, you know, you have to understand who the big players in the markets are. All right. We're just gonna go with big institutional investment banks. Okay. Investment banks, in my opinion, from some research I've done, they use automated trading robots. Okay, these automated trading robots are based on Fibonacci, so that's why we see prices stop right here or in this zone in general all the time. It happens all the time. Now, nothing is 100%. So does it work all the time? No. Does it work at a high percentage where you'll see prices pull right back to the 50% 618 zone and start to make a second leg? Yes, you'll see it at a high clip. Okay, because that's the way markets move. And I'm saying markets move that way because the big players, the investment banks, countries, hedge funds, they all build their automated trading robots off the premise of Fibonacci. Okay, like, you know, JP Morgan Chase, all right, Bank of America, you know, these big institutions, BlackRock, they're not putting in one trade at a time like us retail traders, right? They're putting in, you know, if let's say futures, they're putting in I may put in 2 contracts. They're putting in 200,000 contracts. You see what I'm saying? It's a different ball game. It's a different ball game for the big boys. All right, it's a different ball game. But what I'm saying is this: so they're not just putting in one trade at a time, or they're putting in bundles of trade. They're not risking $100. You know what I'm saying? They're risking $1 million. Okay, so they're the ones who move the market. But what I'm saying is that they don't even just have one person who putting the trades in. They're using robots, these automated trader robots. And robots have to be programmed somehow, some way. And what I'm telling you is that they program these robots with Fibonacci. And that's why you see prices just pause here so often. I mean, it's just uncanny. But to me, to those who've bought my book, to those who have my course, to those who are in the swing trading Titus community, this is no surprise. Okay, the fact that this thing trended down, came up, and paused right here at the golden ratio is no surprise to us. Okay, that's what I'm trying to say. It's no surprise to us. This is just common market cycle. This is just how the ocean, this is how the market ocean moves. It's how it flows. And when you understand that flow, understand this movement, can grab a fib, draw it, and find this box, find this area. Now you can perceive opportunity. All right, you already know that to enter any kind of trade going short here, you're taking a high probability trade because you're expecting that we're going to get another leg of this distance right here. Now in this case, we don't get it. It's not the same distance, but by golly Miss Molly, it's enough to make some money. Okay, it's enough to make some money. Now let me say this also. For people who are new, you haven't been using the Fibonacci, you haven't been using my sweet spot trade or my easy money trade. You know nothing about it. I would like to say, if we remember when I posted in the community, prices was around in this area. Okay. You know what? Let's just go look. Let me just pull it up. Why not? It should be sitting right here. Yep, it's still sitting right here. Okay. Look at where prices were at when I posted this in the community. Okay, prices was right here under the sweet spot. All right. Now let's go back to the chart. Oops, let's go back. What I want to point out is that, prices being around in here when I posted, isn't it just, I mean, what type of confidence? This is another way to get rid of that fear of executing a trade. What type of confidence should you have when prices come up right where we expected into this sweet spot zone and pause right here and start to head back down? What type of confidence should you have in this trade? You should, I'm trying to say, why have any fear at all of taking this trade, right here? Because here's the deal. What are the chances that prices would just stop right here? Like, I mean, I'm telling you that it does this all the time, right? And until you go research it yourself, you may not believe me, but it happens all the time, and you can prove this to yourself for free on a demo account. Doesn't cost you a thing to go figure out whether I know what I'm talking about with this right here. Don't cost you nothing. Don't. I mean, my swing trade time community is only $10. You could join that and figure it out real fast. But even without spending $10, it costs you nothing to go on demo, put a whole bunch of Fibonacci's on. I mean, you could do this in one day. You could just go on your broker, pull up 10 charts, find 10 fibs, see how many of them work. I'm gonna venture to say 70% of them will work. Okay, but what I love about the easy money trade, the sweet spot trade, the fib trade, there's two things I love about it. Two things I love about it to make this point. Number one, I love that it works in any market. I do this in Forex, I do this in futures, I do this in binary options. That's number one. It works in any market. That's the first thing I love about it. The second thing I love about it is that every time I see this happen, every time I see prices get straight to the golden ratio and just stop, I think to myself, like, man, this strategy is fire. Because, well, let me get off of the strategy being fire. I think to myself, What are the chances? That's what I really think to myself. What are the chances that I had this box drawn up ahead of time, way before price got here? I already know that this level here is called the golden ratio. This level here is a 50% retracement, which is called a normal trend. If you do any research on normal trends, what you will learn is that you'll get a trend down, a 50% retracement, and then prices go down. That's called a normal trend. Okay, what I'm telling you is the normal trend level, which is here, and the 618 level, which is here, I call the sweet spot of trading. Okay, and this top part is called the golden ratio. So what I really be thinking to myself is, what are the chances? Like, as strong as this thing was pushing up, man, we heading up. Little trend break, man, we heading up. You know, I mean, we trucking. Look at this thing, is trucking, people. This thing is trucking. And by the way, just to throw this out here, this is nothing but a rally base rally. But anyway, that's just a side note. That's a trade entry. This also in the course. But anyway, back to my point. This thing is trucking. What made it just stop right there? That's what I think when I look at these opportunities that I'm perceiving. You know, what's the chances of it stopping right there? But it does all the time. So people who are new, if you're new to trading, if you're new to this channel, the market, real quick recap on how to perceive some opportunity. The market moves in twos. You're going to get a trend down, trend break, retest a new low. Okay, so once you see the trend down and the trend break, and you're waiting for prices to get back to the sweet spot. Once it does, that's the opportunity. Right here is the opportunity. Well, actually, let me do it like this. Right here is the opportunity. Okay, and when you get here and see that this candle broke out and then came back strong back into the sweet spot, paused right at the golden ratio, now it's time to execute a trade. And if you are in futures, my goodness, you put your stop right here. You can put it closer if you want, but you put your stop above the last high right there, and you ride this puppy down. You're gonna get 10 points. That's 10 points all day. If you're in Forex, same deal. This is a cool, I don't know, 50 pips, something like that, right? And if you're in binary options, I mean, 3 minutes works, 5 minutes works, 10 minutes works, 20 minutes works, 30 minutes works. It's up to you. This is why Fibonacci trading is so beautiful, especially when you combine it with price action. Okay, what I'm teaching you is just price action. Trend down, trend break, retest a new low. That's the market cycle, and that's basic price action. And it's just how the markets flow. Okay, so using the Fibonacci retracement zone, looking for the 50% 618 area, which we call the sweet spot, which is a great area to just enter trades. That's how you perceive opportunity in the marketplace. And once you get there, you got the confidence now to execute great trades all the way down this beautiful trend. You could have entered every one of those. That's 1, 2, 3, 4, 5, 6, 7, 8 wins. That's 8 wins right there, right? So you could say you're doing $100 like me, or you're risking $115 to make $100. You could have given yourself, let's do it again. You could have given yourself 100, 200, 300, 400, 500, 600, 700, 800. You could have given yourself $800 because you saw the opportunity and executed. All right, so that's gonna wrap it up for me. I hope you guys caught on to that. Learn how to give yourself money in these markets by seeing the opportunity and executing the trade. So this is a great time to like, share, and subscribe. I greatly appreciate you. And I'm gonna sign off with that. My name is JD. And until next time, I wish you increase on the sudden. Bye-bye. If you keep on learning, you'll keep on earning. Check this video out right here.